Hey everyone, Kevin here. I've got something really shocking. I have the entire 880-page stimulus bill right here, and the $0 mortgage is in this. So let's talk about this. Just a heads up, I know I talked about this roughly around last week. I kind of shared with you my experience of trying to go through the process of not making my payments on a rental property just to see what the process was like. And a lot of questions came out of that video because we didn't yet have a stimulus bill. In fact, they never called me back. Surprise, surprise. Well, not really. Well, this actually makes things a lot easier, shockingly easier. So let me go through this Senate bill. Just a heads up, the House is expected to pass this tomorrow, and the president is expected to sign this shortly after. It is possible that a change comes in, but this looks pretty solid so far. So let's go through what we've got, and if there are any other weird changes, know that I'll be looking for that. And yes, this is a composition notebook, but it just happens to have the iPad, and look at this, 880-page PDF in it. This is crazy. But that's what you got me for, to go through it all. Now, if you're a tenant, skip to minute 12:25, unless you want to learn some more about real estate and ownership. Number one, the bill says that if you have a federally backed mortgage in either a residential 1-to-4 property, like a townhouse, apartment, a co-op, a duplex, triplex, fourplex, single family house, or you have a residential multifamily building that has a federally backed loan, you could request forbearance. Now let me break that down. Federally backed, bottom line, is gonna be like 98% of you. It means you did a conventional, Fannie Mae, Freddie Mac, Ginnie Mae, FHA, VA, USDA, like these big, really common loans, probably what you got. If you did like an owner financed loan, or a hard money loan, that ain't federally backed, okay? But most of the other stuff is. And if you're in doubt, just send a quick text to your loan officer. Hey, on this place, was that federally backed? They should know. Now, if you have one of those properties, you can request forbearance, which basically means you not making your payment. At some point, you'll have to catch up, but we'll talk about that later. The bill says you can request forbearance if you have one of these residential properties. I believe there are exceptions for land and vacant properties or properties already in foreclosure, but if you've got a residential place and you got a loan and you're not going through foreclosure and some human being is living in it, it's not like a retail store, you could qualify to stop making your payments. But what does it take to qualify? Well, this is where we have to break it down into 1-to-4 and 5+. If you're interested in not making your payment on 1-to-4 real estate, you have to have a direct or indirect hardship related to the outbreak. And the big part about this bill, which is honestly mind-blowing, like this right here, this is the money part right here. This is your $0 mortgage. It says in order for you to verify that you have had a direct or indirect hardship because of this outbreak, all you have to do on 1-to-4 residential real estate is affirm that you have a hardship. Affirm does not mean document. Affirm means state. So if you state that you have a direct or indirect hardship, boom, you should qualify. That's how the bill is written. Now it's different for 5+. Unfortunately, if you have 5+ units and you want to request this forbearance, this affirm actually becomes document. So that kind of sucks. If you've got a big multifamily building, you got a federally backed loan, you're gonna go through a little bit more of a hard time. Everybody in the 1-to-4 space, which happens to be my favorite, all you have to do is say so. So you got, hey, me too, I got a problem too. Yep, I'm indirectly affected. Can't go to the grocery store, I'm affected. I'm running out of toilet paper, this is pissing me off. I don't know if that's exactly how extreme you can go with this affirmation, but the text says affirm, and I'm the kind of person that believes words have meaning, and that's exactly what the text says. And it doesn't say document under 1-to-4, so that's kind of cool. In fact, here's the section where it specifically says no additional documentation other than your affirmation. Now, if you have a 1-to-4 unit, you can get up to 120 days of forbearance, which is 4 months. That's incredible. But beyond that, if you need to, you can actually request an additional 120 days for essentially a total of 8 months of forbearance. As long as you start this process during what they call the covered period, which I believe is March 13th to around July 11th. So you gotta make sure you get it done relatively soon. Though I would wait for the bill to pass, or maybe even get in line and start crawling early like I kind of recommended you do in the last video, but that's kind of our secret, okay? The earlier you get in line, the quicker you get contacts, all right? But we'll save that for a different video. Here, unfortunately, you get screwed again. If you have larger multifamily, you can only request a 30-day forbearance, and after you get that 30-day forbearance, you're allowed to ask for additional 30-day periods. Remember, you have to document this hardship though, which is a little bit more challenging than just me too, right? But you also have to make sure that you put this claim in by the 15th of each month prior. So you've kind of got a little bit of a chore to keep it going on the larger multifamily. Pretty easy over here on the 1 to 4. Now, very important, when should you actually stop making your payment? Only once you have a confirmation, and it better be a written or emailed or faxed confirmation from your loan servicer, the company you make the payments to, that you are in the forbearance program. If you just stop making your payment and you didn't ask, this is bad. You might have your credit affected, you might get penalties and all this stuff. You gotta ask, you gotta follow the process. My expectation is if this bill gets passed this month, which everybody's expecting, then you might actually be able to get this to happen by your April 15th or April 16th deadline, which is usually where most loans become late. Generally, our loans are due April 1st, but they're not late until the 15th or 16th. So hopefully we could use that window to get this sort of forbearance processed if you need it. Now, what about fees? Well, the bill says that lenders are not allowed to assess you any kind of fees. They're allowed to keep charging you interest, obviously, for those months, because in the future you are going to owe this money and you'll have to repay this money. This is just trying to help you now, and we'll talk about that repayment, but fees have to be waived. No fees can be assessed for you going through the forbearance option. Now, what about credit? Can they report you to the credit bureaus for making a late payment? Well, that depends. If you're currently late on your loan, yes, they can continue to report you as being late, even if you enter forbearance. However, if you catch up and then you ask for forbearance, they have to report you as being current to the credit bureaus, which is good. You want to be reported as current. You don't want to be late. So if you're late, catch up, request forbearance, and during the forbearance period, you will be reported as current. So if you're currently current on your loan, that is you're making your payments, you haven't been late, and then you get forbearance, they will report you to the credit bureaus as being current, AKA not late, no negative hit to your credit. And in fact, most websites that you go to for lenders are already being proactive with this. And they're already proactively saying, hey, we're not gonna report you to the credit bureaus, like we get it. Like nobody's out to try to screw your credit during this time. I mean, maybe some people are, but a lot of companies are being proactive about that. And by the way, if you're worried about your credit score, you're probably interested in making money and learning how to invest, in which case you might take advantage of this time and join me in the links below to learn about investing in real estate, learn about how to renovate real estate correctly so that you can profit and make money, and get market insights from me every day at 9 a.m. in our private live streams where I can help you look at pictures of your properties and say, do this, don't do this, here's how to rent the property out, and here's how to get your deal up and running so that you're making sure you're making as much money as possible. Check those links out down below. It's right next to the Webull link, which is of course where if you deposit $100, you can get 2 free stocks valued up to $1,400. Now, what about qualifying for a new loan if you're going through forbearance? Like if you stop making payments on existing loans, is that going to affect your new loans? Maybe not. This is not clear yet, but it's quite possible that you could still qualify for new loans while you're getting forbearance, because remember, the lenders are reporting you as being current. So when a new lender looks at your loan application and they run your credit and everything shows as current, they don't necessarily know that you've got forbearance going on at other properties. Now, I don't know about the whole like ethics of that or morality of that. I think that's for you to decide. But like if you're currently doing a refinance because you need some money, because you need cash, and at the same time you're going to request forbearance on rental properties because your tenants aren't paying, I get it. And right now, there does not yet seem to be a way for new lenders to find out that you're doing forbearance. Although it's possible that they might have some kind of form that they slip in and say, I affirm that I'm not getting any forbearance on any properties. So that'll be another little ethical issue there if that comes up. Now, what about property taxes and insurance? How about handling those, Kevin? So this is where things get complicated. There's nothing in the stimulus bill that references property taxes and insurance. Now, a lot of us, we pay one lump payment. That is, we pay our principal, our interest, our taxes, and insurance in one payment, and then the lender pays our insurance and property taxes for us. But if we go into forbearance and we don't pay our loan for a period of time, you're going to probably end up with something called an escrow shortage, which generally means that escrow company that's paying your property taxes and insurance is going to start billing you monthly to catch your escrow account back up. Now, some counties are doing their own sort of property tax forbearances. Like I think San Diego is saying you have to pay your property taxes, and Orange County says you don't have to pay your property taxes if you have a hardship. Every county's different. It's a big mess. Honestly, me personally, I would just keep paying my insurance and my property taxes. If I had a tenant not paying, all right, I'll float the property taxes and insurance. Let me catch up on the principal and interest later, ideally at the end of the loan, and let's just keep chugging along and get through this mess. Obviously, if you don't have an escrow or impound account, well, then in that case, you probably have to make the payment or risk being late, or again, contact your insurance company and your local tax assessor's office to see what their plans are. I have no idea if any insurance companies are offering any kind of forbearance right now. And insurance is something you do not want to go without, like, especially rental property. That's like the number one thing you need to have, landlord insurance. Now, if on top of all of this, you're still nervous about the risk that your tenants aren't paying and you can't get them out, and you happen to be using a professional property manager to rent your property out, you might want to go to a website called surevestor.com. This is not sponsored, but this is a platform where you can actually get insurance against eviction and loss of rent. Now, there are limits, there are deductibles. I personally am a big fan of do-it-yourself property management, increasing your cash flow when you're local, and being in control of your property as long as you're properly educated and knowledgeable. But if you do happen to have a property manager, that is a potential perk if you want to pay for it. I personally don't like paying monthly fees because I'd rather take my monthly fees and invest them into the stock market. Now, as far as tenants, we've heard a lot of things from different states, different counties, but this bill actually makes it a federal rule that nobody can be evicted during this process. If you request forbearance, you cannot ask your tenant to leave. So if you were thinking, oh, I'm gonna get forbearance and then give my tenant a 30-day or 60-day notice to move, sorry, you can't kick them out and have forbearance. Because remember, somebody's gotta be living there for you to get forbearance. Now, does that mean if you're a tenant, you can stop paying rent? Well, no. Much like an owner or a landlord, you have to ask. So if you have an urgent need, I recommend you get on the phone sooner rather than later. Don't blindside your landlord. Don't just not pay. Open a dialogue sooner rather than later with your landlord. Remember, you're still going to owe this money whether you're an owner or you're a tenant. You still are responsible for paying this stuff at some point. And so if you are a tenant and you need to stop making your payment and you know you're protected, here's my simple guide for you. Number one, document. Send an email to your landlord and mention that you're going to have trouble making the April 1st payment, the May 1st payment. Get this documented and mention it. Step two, I highly recommend you throw an initial volley and say something like, hey, the good news is I am able to pay 25% of it or whatever. If you are actually able to pay 50% of it, hey, quick tip, start your negotiation at like 25% and end up at 50%, and cool, you're 50% off and you'll repay later. The reason for this is because most landlords still have to pay taxes, insurance, and property managers. Let's now talk about the ways to pay this money back, because obviously we still owe the money whether we're a landlord or a tenant. So the three ways to pay the money back are generally a lump sum. This is gonna be the hardest for everyone, both landlord and tenant. This one's kind of sad because, I mean, look, if we go through, I don't know, skipping our payment for April, May, and June, and then the bank or our landlord says, all right, it's July 1st, everything's good, pay up the last 3 months. I don't know who's gonna be able to make all that money appear. Like, that's a bad idea. I don't think that's gonna work for landlords, and I don't think it's gonna work for tenants. A lot of banks, unfortunately, right now are trying to pull that off on a lot of homeowners who are calling in. So be aware. Do not accept something like that. It's a bad idea. It's possible we're gonna have to wait a week or two for things to kind of iron out, and we kind of see how precedents get set and how Congress sort of mandates in different states that these lenders respond. So again, this is why I think we're probably gonna be handling a lot of this around like April 5th to April 10th is my guess for when a lot of us are really gonna wanna call in, because we're not gonna get stupid offers like, oh yeah, make a lump sum payment at the end of this period. Bad. The better option for both landlords and homeowners is the installment option. And that's basically you stop making your payment for April, May, and June, and then starting July, you pay your regular payment, let's say it's $2,000 per month, and then you add, I don't know, $200 a month every single month until those months are repaid. That's realistic. That's how I'm expecting tenants to repay if they can't pay, and that's how I would be okay repaying as well if I'm an owner. It gets me through the tough time, and yeah, it's a little bit more of a payment every single month after that, but generally if we can afford $2,000 per month, we can afford the $2,200 per month, and it just took a lot of stress off of our shoulders during this sort of rough period of time. So, you know, it is a little bit of a double-edged sword. So the installment option is really great, good for tenants, good for homeowners, but the best case scenario for homeowners is right here. The add method. And the add method is basically adding the payments that you were supposed to make now to the end of the loan. Best case scenario. Bad for tenants. Last thing you want is a tenant moving out and then, oh, by the way, now you owe me 10 grand because you missed 3 months and you owe the last month. Well, the security deposit's gonna get chewed through, then you don't have any tenant leverage. That's just a bad idea. You want tenant leverage. That's what I teach in my property management course, link below. Do it yourself property management. Go save some money. But anyway, adding the payments to the end would be the phenomenal best case scenario. This would literally be akin to the $0 mortgage, because in theory, for 8 months, you could defer your payments and then just attach those to the end of the loan in 20 or 30 years from now, which, thanks to the time value of money, isn't that expensive. So folks, there you have the latest and greatest directly from the Senate bill. There's a lot of other stuff in here, but this is what's in the Senate bill when it comes to mortgages and the potential for your $0 mortgage for up to 8 months, which is incredible in some way. Add it to the back of the loan, it's kind of like you're living for free for 8 months. So if you like this video, make sure to like and subscribe, follow me on Instagram, and until next time.